Hello, welcome to this live webinar. Our focus for today is sizing. In the market timers dashboard, you have one column called sizing volatility adjusted. It is a calculation which is based on volatility of particular asset. And it's this first number. So for MTUM, it's 5.98% of your capital. Soybean SOYB ETN is 3.17 at this point. Ralph Lauren is 2%. So it's these numbers. And this calculation is basically designed for active portfolio in combination with ETF stocks. I built it for myself in peak season, having 40 to 60 tickers in my portfolio. So if you are a casual investor and your portfolio has usually 8, maximum 15 tickers, what you can do is you can apply a multiplier of this size just to adjust it to your risk feelings. I'm very conservative. I size things very small. You might feel it different. Whatever makes you sleep well. So you can use this number to adjust your size to volatility, but then you have to adjust it to your head. So I have created a calculation table where I show you what kind of factors, in addition to volatility, I use to calculate my size and my sizing.
David, hang on one sec. Hey, Pete, can you see any of David's screen?
Yeah, I made it big.
Okay, so basically what I'm doing with the group of casual investors is since the plan is that the casual model portfolio will have 10, maximum 15 tickers. So we will use 2.5 multiplier of this size that is kind of designed for a portfolio of 40 to 50 tickers, right? So this is one thing. This is up to your liking. You don't have to copy this number that is calculated. You have to adjust it to yourself. But then there are other factors you need to adjust to. So basically, how I do it, I'm sanctioning, reducing size based on different factors. I am differentiating a diversified asset or non-diversified asset. Diversified asset is a ETF like SPY, QQQ. You have a diversification effect. Then you have non-diversified like Tesla, single stock, or single commodity like copper, or even some of these ETNs through which you trade volatility. So I'm punishing that and I'm reducing it by 1/3 just for not being diversified. So I multiply that number by 0.66.
And David, what you just said, you could probably apply that thinking to a sector ETF or an industry group, because obviously there's no diversification there other than, it could be XLF, right? Well, okay, great. You have diversification amongst banks and finance.
Yeah. But still, more diversification than if you just hold, Goldman Sachs, right?
Versus a single name, yeah.
Yeah. So then because shorting has a much higher risk profile than long, so I'm sanctioning size or reducing size if I'm shorting something. So again, the final number I again reduce by 1/3. It's always I reduce it, then I reduce it again. So I again multiply by 0.66, right? And another sanctioning is liquidity. So where I see small liquidity, like small caps, or platinum, commodities that are very illiquid, or ETFs that are illiquid, like Israel, right? Israel ETF is very illiquid. So I again reduce size for low liquidity. So again, I reduce it by 1/3, right? So, for example, if we get, let's see, SPY is right now 5.24% size. This volatility adjusted size, you can see it right here, 5.24. So let's see what it calculates. So for casual investor, it's times 2.5, and if you want to go short ETF, your max size for this short would be 8.6%. Now let's look at something different. Let's look at, for example, Plug. It's a single stock that we want to short, and the recommended size is 1.14%. Oh, so it's comma here. This we will run in a big portfolio. So I will keep the multiplier to 1 only, and so it's a illiquid stock. So you can see it's short, illiquid, single asset. So our size should be maximum 0.33 bips of your entire capital, if you are running a big portfolio with lots of tickers, right? So, right. I'm short Plug, and I'm short already 45 bips, so I overshorted it a little bit. Oops. I have to fix that on the next red day. Now, for casual investor, good example is because we are now building a short position in Invitation Homes. Instead of shorting XLRE, we are doing Invitation Homes. INVH. So if we look at the dashboard is saying 4.33. So I put here 4.33. Here is the multiplier, and it's a single. Do you, Angelo, would you consider this diversified or non-diversified? Because is it holding like a variety of properties, or is it just loaded with one thing?
Well, their properties are all identical, basically.
Very much a niche.
This is non-diversified. Yeah,
Yeah.
it's non-diversified
Okay.
for sure.
So basically, it's a short. These are liquid, right? If you look at the, this is not a small cap, right? So this is not. I wouldn't call it illiquid, right?
It's liquid. It trades 3 to 4 million shares a day.
So this is long liquid single asset times penalty for being short. So basically, after applying this multiplier of 2.5, the max size for this short is 4.7% of capital for casual investor who would have maximum 15 assets in his portfolio. For me, with tons of tickers in my thing, the max short for this would be 1.88%. So again, this is some way how to make your sizing systematic, right? How to make it repeatable.
David?
Yes?
Comment about identifying the potential volatility and risk in something. So, Aaron said this trades 3-4 million a day, which is pretty liquid. But then you have a problem that happens. Is it a hedge fund name? Because the problem there is if hedge funds, they all kind of do the same trade at once, which in a way changes what the real liquidity is.
Yeah.
And
Yeah, that's a good point, Pete. So another
to me, that shouldn't be that big a short in a portfolio.
So another item that needs to be incorporated into this worksheet, David, is short interest.
High short interest. Yeah.
Well,
But isn't that kind of under this illiquid theme?
No.
Because when you have high short interest, then the squeeze is based on a problem with liquidity, right?
Well, generally yes, but you also want to know, if you're buying this at the top of the range, and
you mean
short
shorting?
interest, and yeah, if you're shorting it at the top of the range, and the short interest is greater than 12%, right? You may want to go a little bit bigger. Whereas if short interest is less, somewhere between 6 and 12, under 6, something like that, maybe maybe you're not going as big.
As big.
Or vice versa. But it's all about making sure you're shorting it at the top of the range. That way you're not getting squeezed. Because if there's a lot of short interest, 12 or more, a squeeze can be painful.
Yeah. So, this is a very good idea. I mean, this is just some example because we will have now a lot of new users coming to Market Timers. So this is something people can look at. Of course, everybody does it different. This is one way to do it, and you can enrich it with many other things. I like your idea, Angel. Maybe I will incorporate it. Especially for the casual investors will get a lot of those who have very little experience. So for them, it's important to do this properly. And then the next step. So what we are showing here is the maximum size, right? So let's say SPY it was 5.4. So okay, so for casual investor, maximum short position in SPY is about 9%. But we don't want to be shorting it all with one click. Important is to short it incrementally. So now we are in a bear rally, and we don't know where this bear rally peaks. Is it going to be at ES of 4,187, or is it going to be 4,460 or something like that? We don't know. So this number that you are calculating here shows your maximum. And then you have to look, where is your maximum pain? What is the maximum level? For that, we use this tail range. For me, tail range is kind of showing me the maximum pain. Where I don't want to be squeezed before it reaches the top of the tail range. So if we look at SPY, the top of range for tail is 442, and right now we are at 412. So it's another 30 handles, right? That is a lot in SPY. That is what? That is 8%? Something like that.
What's the top of the
maybe
range?
Angel, what I need to do is I need to kind of add here how many percent is still, how many percent you have to the top of range, so you can know.
441 divided by 12, that's 7%.
Yeah. So that's if we look at the chart. I don't want to be showing my chart right now because I've got the amounts of my money. But I think this represents something like ES 4,400 something. So yeah, so this is my this is my maximum pain. So if I'm shorting something now, I need to make sure I short 1/5, some maybe maximum 1/4 of the full size. When we get to the target of 4,187, of course, I'm going to short much more because part of this short will be long term. I will be looking for new cycle lows, but part of this short will be just for a couple of days to just catch the movement from that target. So you need to make sure. You need to take a look. Where is your maximum pain? Of course, this is some model that calculates it. Different people or different analysts or companies have different models, but they're kind of similar. So these numbers are not a concrete wall that it will come to this number and you're guaranteed it's gonna turn around. It's a navigation point, right?
And you know, David, a stock that's on our short list that's at the top of tail right now is PINS. Why don't you pull that up? And I'll give you one other thing about pins. It rejected its IPO opening range today too.
Mm-hmm. No.
So that's not good. But if you look at pins, it's at the top of the range pretty much on trend and tail.
Yep.
And the added bonus of rejecting its IPO opening range.
And do you know what is the problem with Pinterest?
Oh, it's high short interest stock that they were guiding 1 or 2 percentage points higher for the rest of the year, and so it's your classic company that had high short interest. Stocks being covered with a little bit better guidance, which is not going to pan out.
Yeah. So notice this number 64.6 and this number 67.8. This number is on tail range, so this is on monthly, and this is on weekly. This is a CHOP index. It's really high. Things are trending if CHOP index is below 50. And this is like 60 is already a lot, and 68 is a lot. So also when you look in the chart, Pinterest is in a consolidation, like a really chunky consolidation. So what happens in consolidation? The volatility is decreasing, and the price ranges are also narrowing because it's chopping back and forth a narrow range. And what happens is that market will often first break out in one direction from this consolidation. Then you wait for it to fail, and then you start shorting it, right? Once you see that the breakout to the upside has failed. So this is one way to go around it. But the problem with Pinterest, it's consolidated. It can break out violently to any side. It can first break out to the upside because of the short interest. And of course, most likely this breakout to the upside will fail at some point. And then once it fails, then I would short it really full size. But I'm short. I actually shorted today some of this.
All right, David, I have to excuse myself because I have to get ready to leave.
I think it's clear we discussed this topic. This is just, sizing issue. And hopefully we can then get some questions from people. And thank you very much for your attention, and see you on the next webinar.